Welcome to Market Outsiders, where business news meets real insight, real fast. In just 15 minutes, the management consulted leadership team, Namaan and Jenny Rae, that's me, breaks down two major stories through a business lens, helping you spot what really matters underneath the headlines. We cover economic news, market news, and business stories that are incredibly interesting and updated daily. These are the things that drive markets, both from the inside and from the outside. You can catch Market Outsiders live every weekday at 9:15 a.m. Eastern on LinkedIn and YouTube, just before public markets open in the U.S. Stay tuned in right here to get every episode on Monday through Friday.
Hello and welcome to today's edition of Market Outsiders. It's Thursday, June 5th. My name is Namaan. I'm joined by my colleague Jenny Rae today. Jenny Rae, how are you?
Great, Namaan. Happy Thursday to you.
This week we got our days right. I think last Thursday you thought it was Friday, but this week you're on the right track. So 5-day weeks for the win, huh?
5-day weeks for the win. But honestly, I still had to think about it.
Well, let's dive into some of the news that's being made today. There's a lot happening in the markets, and you're going to hear a lot about China and trade elsewhere. So I wanted to take us in a different direction today. Something caught my attention as I was browsing the headlines this morning, and it was around Kimberly-Clark. And so what I'm going to do is I'm going to walk us through a headline that I saw this morning around Kimberly-Clark selling the majority stake in its international tissue unit to Suzano, which is a Brazilian manufacturer. Jenny Rae, how familiar are you with Kimberly-Clark?
So, Namaan, at least today I can say that I've also read this. But if you had asked me yesterday in trivia who the owner of Kleenex was, I don't know that I would have gotten it right.
Yeah, I think of Kimberly-Clark and I think of Scott's tissue paper or toilet paper. And I didn't realize the diversity of the brands under the KC umbrella until I was reading this morning. And so let's just quickly walk through the headlines first, and then we can share a little bit about how we're interpreting this news, because I thought that this article was good in terms of the facts, but really lightweight in terms of the implications of this news. And so for those who are not familiar, Kimberly-Clark is a kind of paper products manufacturer. They own Kleenex, they own Scott's toilet paper, they own a lot of other brands in that same lane and vertical. And what they are going through right now is a reorganization into 3 divisions. And the international tissue unit is the smallest of their divisions. That's non-North America. It's the smallest of their divisions by revenue and by margin. And so what they are doing is they are reshaping this international tissue unit into a joint venture with Suzano. And so Kimberly-Clark will have a 49% stake in this JV, and Suzano will have a 51% stake in this JV. And the terms value this unit at $3.4 billion. So that's what's happening. I'm more interested in why it's happening. And so, Jenny Rae, I've got a couple of takes, but I'll throw it over to you first if you want to kick us off, because I have a feeling we might be thinking the same way about this.
Well, I think that it's interesting because I've gone through these kinds of sales and purchases, both buy side, sell side on the advisory piece. And it's always an issue of focus and deployment of cash. So you're thinking through whether or not what you're doing with your current money, with your current focus, which is honestly usually more of a commodity and a precious resource, maybe even better said than a commodity, right? It's something that is incredibly valuable to you from a leadership perspective to lean into your more profitable segments. The fact that more profitable and larger dovetail here for Kimberly-Clark seems like this was absolutely the right decision.
Yeah, and you see that here in the article too, right? Like they look to focus on more profitable parts of their business, like North America tissue, like personal care. The first thing that I thought of beyond just, an increased or streamlined focus is just, okay, Kimberly-Clark must need cash right now. Because this is still like a multi-billion-dollar line of business. It's still profitable. Like now it's lower margin than the other lines of business, but it's not like this is a declining business. And so as I was looking at this, I was like, okay, their revenue overall must be declining, or their costs must be so dramatically exploding that they're in a position where they're like, we'll take $1.7 billion in cash now to offload a majority stake in this line of business. And so I think that it's not just an issue of focus, it's an issue of cash position as well, because you don't make a move like this unless you have to. And to me, that would make, investing in this company, at least right now, unattractive in the short term.
In general, when we were looking at the idea from the buy side, there could be some cost benefits for an organization like Suzano. So if they're thinking about, hey, why do we want to do this? Perhaps they think that they are better cost operators than Casey are, and that would make it potentially an attractive investment from their side. But the trump of everything was always, what are the main things that we want to look at? Number one is growth in the market. And so if the interest in Kleenex going forward, if you don't see an opportunity to revive those sales, you have to go into cost operation, but you're in a different maturity stage of the business. And it just changes exactly where you think you are and where you want to go.
One of the things we do here at Market Outsiders is we look at the news, we look at the headlines, and we walk you through how we're interpreting them in real time. That's one of the value propositions and one of our promises to you of this podcast. And so as you're hearing us think through and talk through this, one of the things that I'm thinking about is, does Suzano actually have a more diversified manufacturing operation than Kimberly-Clark does? Because I wouldn't expect that to be the case, right? Like, as you're talking about cost advantages that Suzano would have, I would think, okay, Kimberly-Clark is the larger player. They're the more global player. I would think that they have, a more optimized supply chain and a more optimized manufacturing base than Suzano does. And so maybe I'm wrong, but if that's my hypothesis, that's why the first thing I went to is, okay, they must need cash and they must need cash now, as one of the impetuses for doing this. I can see the benefits of Suzano, right? They get to tap into Casey's scale. They get to tap into some of the brand strength. They get to, my guess is they become like the sole distributor of Kimberly-Clark brands, especially in South America. Like, I get it from their side. From the Kimberly-Clark side, I was a little bit more shaky on why this and why now.
Yeah, look, sometimes if you think that you can deploy cash into a higher margin business, it's as simple as that. So like you said, Namaan, they weren't looking for a partner to go to the next level. They were looking for cash to take their other businesses to the next level. And when you think about the deal like that, it becomes a lot more clear. And if I didn't know that that was true, if you want to look more into KC today, I would take a look at their operating divisions. I'd work into their 10K to really dive into what the operating issues are inside those divisions. I'd look into analyst calls to identify what growth rates are. And I'd really tease out the pieces of the business. Some of these portfolio companies, Kimberly-Clark is a great example of one. Georgia Pacific was one that I worked in. Right, toilet paper and paper towels, toilet paper for corporates and home toilet paper, different pieces of the business. And so if you're able to really isolate what the issues are, I don't see huge synergies between these businesses and other ones, other than maybe pulp. And they're acquiring a piece of the vertical integration with Suzano in the first place. So I think there's a lot of opportunity for them to simply deploy the cash and the focus into these higher margin businesses, and you're usually going to get rewarded by the street to do that.
It's possible that this is also a response to the tariff environment that we're seeing globally now. Right, this is a U.S.-based company. They're based in Dallas, just up the road from me, and it's interesting that they are spinning off their international tissue paper or business because they are probably feeling the effect of reciprocal tariffs right now. And so on top of the fact that it's their lowest revenue and lowest margin line of business, they might just be thinking this will be worth less tomorrow than it is today if this tariff regime continues internationally. And that might be another part of the calculus.
Absolutely. Kleenex are going to be considered a generally essential item, but again, spurring growth in those areas. You don't see it. But what you said earlier about them accessing other business lines, one of the things that I was surprised that Casey produces is Huggies. I didn't know that they were the owner of the Huggies brand. And again, you can see some input cost synergies there. But from a brand perspective and from a driving use perspective, I did projects 20 years ago on increased diaper access in developing nations, which Brazil will have an even closer and stronger perspective on. A lot of those developing nations have stronger population growth than mature countries like the United States. You can imagine that maybe I don't need more Kleenex in my household, but if I have 2x the children versus what I had 10, 20 years ago, then you're going to have natural growth there.
So that was the first thing I wanted to talk about, Jenny Rae, was this Kimberly-Clark news. Let me turn it over to you if there's something else you're seeing take place in the markets or in business that you wanted to address today.
Well, this is really wonky, Namaan, but just to kind of finish up with a really short piece today, I thought that the news about the European Central Bank trimming interest rates was very interesting today. And we don't often go outside the US when we're talking about this news, so I thought it might be worth it to cover that today. Let me see if I can pull up, I'm looking just to see if I can expand the view here. So let me just share my screen here. European Central Bank trims interest rates after inflation dips below target. We're always looking for things that are counter narrative in order to really develop understanding. And so this one prompted my interest this morning because in general, worldwide, with trade wars and tariffs, you would expect that we would be at an interest rate hold or potentially interest rate increases. And so something counter expectations would have to have happened here in order to see a trim of interest rates. And the first one would have been that they were at peak inflation. So I kind of took a look at that, right? And so that wasn't the issue, that they were trying to spur some of the changes, right? Critical time for the Eurozone economy, increasing uncertainty. Again, you don't drop interest rates in face of uncertainty alone. You can't, especially if you're concerned about inflation, especially if you're concerned about price increases related to tariff or trade wars. And so I had to really dig into this article to figure out what was going on. And so we kind of talked about this, right? Updated assessment of the inflation outlook, dynamics of underlying inflation, strength of, okay, they're just parroting the same issues. Here's the key. The back of a stronger euro and lower energy costs. Then later on, there was one other major key that I thought was super interesting. Let me see if I can get down to this later piece on here. Rising, this is like almost 3/4 of the way during the article, right? Rising government investment based on, can you still see that?
Mm-hmm.
I can't see it anymore. This is, I really just like Riverside. Okay, oh no, I'm back on it. Rising government investment in defense and infrastructure will increasingly support growth over the medium term. So here's what they're saying. The investments that we're making, largely due to the Russia-Ukraine tensions and the Israel-Palestine tensions, which are very, very present for Europe, are key issues, but they're also in the wake of these geopolitical tensions driving down energy costs. And it made me question what's actually happening inside US energy right now, because it's something that we haven't talked a lot about on the pod, and I think it's something that we should put on our list to cover soon. We talk a lot about caring a lot more about some of the economic indicators than other people do and less about other ones. And to me, at the very beginning of Trump's presidency, I said, almost nothing else will matter if we're able to drive down energy costs. And I'd be really curious to see where we are on that and what progress will look like on that, as well as the outlooks going forward. Because you'll see that energy costs is one of those things that underpins price changes and specifically inflation in almost every environment. And it was something that a lot of people in Joe Biden's presidency didn't tie together, I think, effectively enough. They didn't say because we have high energy costs, we have high inflation. They just said, look, we have high inflation and high energy costs. And I'd really like to make sure that everyone has a clear understanding of how important of an input cost this is and also how diverse the sector is in the way that it's measured. So just wanted to table that because it kind of piqued my interest in this European Central Bank news today. And I think it's important geopolitically. I think it's important for business understanding. And I think we should talk about it more in a future episode.
Yeah, no, energy is an input cost for every single industry and every single business on the planet. It's also, along with food prices, like the most volatile part of the inflation index. And so when you see inflation going up and down, chances are the drivers of that core inflation are either energy input costs or food costs. And so when it's one of your main two levers to either bring inflation down or drive inflation up, then it's something that we absolutely should be paying attention to. And I think the combination of lower energy costs and rising defense investment are good news for Europe, because one of the things that I've seen in academic studies in the past is that every dollar that you invest in defense, has a kind of more than a 1-to-1 return economically, because you are not just investing in your core military capability, but you are building an ecosystem of innovation inside of your economy. And so I think this is long overdue for Europe. It's good news for the European kind of venture space. It's good news for European defense tech. It's good news for European just tech. And it's also good news for the US because a lot of the parts, a lot of the innovation that's going to really make up this rising investment in defense is going to be, we're going to have a part to play in that. And so it's a net benefit, not just for Europe, but for the US as well.
Look, when I graduated from university over 20 years ago, the idea that growth in Europe was coming was wildly popular. And it was right after the euro was formed. It was right after the focus of this new central bank policy. And there was this idea that they were going to be able to spur innovation. And in some of the early days, you did see a lot of unicorns coming out of Europe. But like you said, Namaan, that if there's an innovation index out there, we need to track it. If there's not, we need to create one, because we have seen a massive drop in European innovation over these input 2 decades. And with the rise of AI, the gap is widening. And so again, this investment, I think, is a really critical little asterisk in the article, but something that I would want to understand a lot more. Well, I think that's worth it to cover today. What do you think, Namaan? Do you have anything else that you want to dive into? You want to talk about the weather in Austin before we close?
Yeah, boring.
Well, it's not too boring. Thanks, everyone, for joining us. We're really glad that you had the opportunity to jump on today. If you've got future inputs, articles, indexes, questions, we love getting them. They shape our narrative on these episodes. And we are often taking the news, we're pulling it apart, but what you want to understand really guides us. So please weigh in just by sending us a message, like and share the episode, and we will see you on the next one.
That's today's Market Outsiders. Real insights, real fast. Join us live each weekday at 9:15 a.m. Eastern on LinkedIn and YouTube. But make sure you're subscribed to catch all the action as it unfolds. If you have questions or a story you want us to cover, reach out anytime to team@managementconsulted.com. Plus, if you love Market Outsiders, share it with a friend or colleague. We'll catch you next time on Market Outsiders.